Interested as to what this ultimately means if we get the sign-off January 10th.
Absolutely. It's a pretty big move. It's going to be 15 years after the initial Genesis block of Bitcoin. And what we expect to see is actually a rotation from GBTC, spot Bitcoin, as well as the future into the ETF, because not only is it cheaper, but also from a custody and security perspective, it's going to be a lot safer in terms of risks. You have BNY Mellon, who's the admin for over half of the ETFs today. And what you'll see also is instead of paying 10+% for the futures carry rate, you're going to pay an implied cost of roughly 20 bips in fees, which again is a lot cheaper. So you'll likely see the CME basis collapse, which we expect to be trading under Deribit.
So ultimately, people get out of the futures because it's expensive. They go to the spot Bitcoin ETF. And we're looking at sort of a whole raft of inflows. What it ultimately means, will it be 5 to 10 billion in the first week of trading? What sort of scale of adoption do you anticipate, Aya?
I think, the market has priced anywhere between 1 to 2 billion. You saw Standard Chartered that said they expect anywhere between 50 to 100 billion within, 2024 alone. It really depends. But I would say, today, you still have open interest that's the highest it's ever been on the CME. So institutions are very much long Bitcoin. And because it is so expensive, but also very difficult to trade on the CME directly today, whether it's through an FCM or it's through your broker, we do expect to see that migrate over to the spot ETF, which will just inherently be easier to trade.
And Fractal, of course, your business that you're building is all about trying to make trading, liquidity, the whole use case of this new asset class easier. I'm interested as to what sort of scale of adoption you see for retail. Like, a lot of this is about institutional buying. A lot of it's about whether or not I can get it on my pension.
Exactly. And so, the conversations we've been having, we always talk about the Santa run up, or the conversations that people have in Thanksgiving when they're home with their families. And really, the realistic thing is, up until now, people couldn't purchase this easily in their 401k and their IRAs. And now this unlocks this entire market, which is, over 6 trillion just in the ETF market alone in the United States. The RIA market is also massive, specific in the US. And the fees for this is also relatively low. We're seeing a competition of fees as well. And aside from just your dad, your grandparents being able to purchase this, we've also seen a lot of narratives, Bitcoin narratives on chain around surrounding companies that are BTC specific also have a run up into this news.
It's interesting, isn't it, the way in which the SEC has been trying to play this. There's been lots of anticipation and perhaps reporting that they didn't want to make a kingmaker. It sort of happened with the futures Bitcoin ETF, where ProShares just got ahead of the rest of the pack. How do we decide which particular offering you go for? Is this going to be like a rush of marketing to decide which particular, whether you go to Fidelity, whether you use, ARK, all the different vying of spot Bitcoin ETFs, Aya?
I think at the end of the day, it always comes down to the comfort of the individual user and, the access that they have. If the overhead is going to be really high in terms of opening new accounts, they're probably not going to want to use it. And so we're seeing, one, in terms of access, is it already sitting in someone's 401k? Is the RRA already exposed to that specific broker? The second is the competition around fees. So you saw BlackRock adjust down to 20 bips. You're seeing Bitwise at 24, ARK and VanEck at 25, and then all the way up to Grayscale at 1.5%. And so, that's also a big portion of it as well. Realistically, I think when you look at the exposure BlackRock has in the specific market, it's a no-brainer that they probably have the overhead in terms of just being able to access a wider market.
Meanwhile, people who've been in the crypto space are still looking to trade. And I know you provide infrastructure, whether it's clearing, settling, sort of margin on digital assets. They're not just looking to play in Bitcoin. They want altcoins as well. What does the spot Bitcoin ETF mean for ETH, for Solana, for some of the smaller altcoins, the meme coins even?
Yeah, so I will be honest, the altcoin market has been lagging tremendously into this move. This is the lowest level of ETH BTC that we've seen over the last year. And so it's really going to be interesting now to see, what's the narrative around the ETH ETF once BTC is approved. And also we've seen clients trade ETH-E, the ETH future, into the approval tomorrow, assuming that there might be an ETH ETF coming next. On the more esoteric alts, we've seen around the Bitcoin narrative, you have Stacks, STX, ETFs, which is smart contract on Bitcoin, Ordinals, and Thorchain, Rune. All of these are built on Bitcoin and then also seen a price appreciation into the move with this ETF.